Stellar, or the XLM token, is on a massive run, and for good reason. It now integrates with traditional finance using tokenized assets. So assets that can usually just be traded within regular trading hours on Wall Street now get tokenized and can be traded 24/7 via the DTCC. Now that's news from 4 days ago. DTCC announces plans to tokenize custodied assets. And that has created quite a bit of hype and potentially also noise. So for example, there are news articles like this: Stellar is flipping Monero. And that's true. The market cap of Stellar is now 8.8 billion. Monero's market cap is only 6.6 billion. But really, it's not newsworthy, because have a look at Stellar's price relative to Monero's price. This horizontal line shows when Stellar is larger than Monero. We have just seen the flippening, but the current situation is what we had most of the times in the past. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and on this channel I dissect what's actually noise and what's signal. I share what data points I personally look at in order to outperform the market. My trading history is 100% transparent. I started publishing my trades in real time 2 years ago. Had you invested 10k in every single trade, you'd now be up 77k. On average, I made 5.2% per trade, held 27 days on average per trade. And here is the history. So every single trade can be 100% verified. I don't know many other people here on YouTube that are willing to be that transparent. More information is in the link down below. Now on this channel we were discussing the development of Stellar from the very beginning. The first video was published 3 days ago, and that video outperformed the average video by 70%. It got 70% more views. Another video followed that got 77% more views, and here is the most recent video that got 4.1 times more views. So clearly the hype is building up, more and more social attention is building. The question is, are we now too late to buy? Now the first video on this channel was published when Stellar was still at 15 cents. It then subsequently doubled, now it came back down. If you haven't watched the very first video and you're comparatively late to the party, feel free to subscribe over here. I publish videos regularly and I always try to be early enough when the momentum is just building. Now why did the DTCC select Stellar to tokenize their assets? One of the main reasons is that Templeton tokenized US Treasuries on the blockchain back in 2021. And Stellar even has its own Dune account showing the data. US Treasuries still make up a large fraction of all of assets on the Stellar chain. They're not necessarily the growth driver though. That's rather public credit and active strategies. The big question is, are we going to see active trading of stocks on the blockchain on Stellar? Because that's where the real money is made, at least in terms of trading fees. Traditional finance is already indirectly reacting to the situation. There is a futures contract listed on the CME. Or to be more exact, there are 2 future contracts, and they're both getting more activity recently. It's quite interesting. All of this hype is around the tokenization of assets on the Stellar chain. But Stellar doesn't try to niche down on RWAs. It seems like Stellar still wants to sell the other use cases as well. It is not a truly focused blockchain. We've got global payments, we've got fiat on and off ramps, we've got charity donations, there's also decentralized finance. And really, the use case that might be taking off is RWA. It's real world assets. It's the tokenization of assets that are already available on Wall Street. Even the recent post on X written by the Stellar team is not focusing only on real world assets. It also mentions partnerships for global payments, the launch of a borrowing and lending platform, another swapping protocol, and we have to scroll quite a bit down until we get the DTCC announcement. Isn't that quite interesting? There is actually already one project in crypto that's capturing traditional finance trading volumes, and that is Hyperliquid. So Hyperliquid is a perpetual futures exchange, and we cannot only bet on cryptocurrencies over there, we can also now bet on traditional finance assets. And those kinds of assets tend to see most growth in terms of trading volume. Have a look at this here. We can bet on Nvidia, for example. But there's all kinds of traditional finance assets. We can bet on the S&P 500, we can bet on oil, we can bet on gold and silver, on Microsoft, etc. This is actually where there's a potential opportunity. Because have a look at the funding rate. The annualized funding rate for Nvidia perpetual futures on Hyperliquid is currently 80%. So there is funding rate arbitrage to be made here, right? We could short Nvidia on Hyperliquid, earning those 80% per annum. At the same time, buy Nvidia, say in traditional finance. We can buy spot, say in a regular account. That way, we are completely neutral to the price. We own Nvidia stock, and at the same time, we earn funding rates shorting it. I think those kinds of trading strategies, arbitrage trading strategies, will be the main driver why the adoption metrics for traditional finance assets on the blockchain will go up quite significantly, even without retail interest. Hyperliquid is definitely benefiting from the tokenization of assets, or at least from the ability to bet on the price of traditional finance assets. Now, what does this all mean for the price of Stellar? Let's have a look at XLM in isolation, but let's also compare this to Bitcoin, for example. Does it make sense to take on the additional risk of buying a small altcoin versus Bitcoin? Do we get more performance long term? So here is XLM versus the US dollar. It appears as if we are trading around an equilibrium. So the average price is here, this dotted line. That's 18 cents. And we currently might be slightly above that equilibrium. But really, a lot of the appreciation that we see every now and then is also driven by the general crypto market going up. When you have a look at XLM relative to Bitcoin, the trend is rather clear. Long term, Stellar tended to underperform. Let's just take those two price tops. This here is an underperformance of 87% over the course of 6 years. Where does the underperformance come from? It comes from token inflation. So this is the price chart over time, and here is the market cap chart over time. The market cap sees new heights with every rally. The price does not see that, and that's because more and more tokens hit the market. How many tokens? That's over here. We've also discussed this in prior videos on this channel. This is now a time window of 5 years. The number of circulating Stellar tokens over that time period grew by 45%. That means it's an annual inflation rate of almost 8%. Every year, the number of XLM tokens increases by 8%, while Bitcoin, for example, has an inflation rate of only 0.8%. So we've got 10 times more supply increase in Stellar, and we need to get the demand in order to justify all of that supply expansion. And while the DTCC announcement is very positive for Stellar, that's just the intention of building a product. We don't yet have that product, and we also don't yet have the adoption numbers of the product. Building the product is the easy part, comparatively speaking. Getting the market to adopt that product is much harder. And so it is a risky bet to buy XLM now over the long term, because it tends to underperform versus Bitcoin, but also because it's at the higher end of its trading range. Now, what about the leverage that's currently baked into the Stellar price? In the last 24 hours, we had 146 million worth of trading volume on Upbit on the spot market. Now, on the perpetual futures market, we had more than that, close to 800 million. But that ratio isn't actually too bad. In general, we tend to have more trading volume on the perps than on the spot market. Seeing roughly 5 times more trading volume on perp versus spot is still quite reasonable. The social attention is moving up rapidly, as you've already seen with the statistics on my channel. The trading volume isn't going up as much. So where does this disconnect come from? Let's have a look at the perps. So what we've got over here, that's the open interest. That's the line in green. This measures the amount of leverage or the amount of bets that are currently being made on XLM. So the short-term perpetual futures market, how many people are currently betting on the price? When there's a lot of attention on XLM or on Stellar, then there's also more bets on the price. And that also tends to be the time when the price itself is elevated. Once less people bet on the price, that's also when the leverage declines and when the spot market price tends to go down. And so that's the potential risk here, right? We've got relatively high open interest. If that was to decline from here, that means the price would decline. We are not yet at historically elevated open interest levels. So there is still some upside potential, but we are definitely in the danger zone. Now the trading volume also correlates with the price. So that's now the trading volume specifically to the perpetual futures market. Let's have a look at how this developed recently. Trading volume tends to be the fastest of the indicators, and yesterday was actually not as active as the days before. So it seems like we already see a slight decline of activity in Stellar. More people are talking about it, but not necessarily more transactions are being made. With that rally, of course, we also saw our fair chunk of short liquidations. So that's people that are betting on falling prices, and they got wrecked. Now, instead of assessing the situation day by day and following the news, I like to trade assets based on trading rules that historically worked well. So I run simulations of buying and selling an asset and try to figure out what rule worked well in the past that we can potentially also apply for the future. So I've tried to find the best golden crosses and death crosses, so crosses of 2 moving average durations. That comes from Bitcoin Strategy Analytics, so that's the backtesting platform of this channel. And here is the result of 40,000 backtests. On the x-axis, we've got the slow moving average. On the y-axis, we've got the fast moving average. And every data point here is a single backtest. And the best backtests are in the short durations. It's not in the 200 days, it's rather in the 10 or 20 days. The very best result is the one over here, the cross of the 2-day SMA and the 8-day SMA. Here is how the performance looks like over time, measured in Stellar. So this tends to go up almost every single year. I like this strategy quite a bit. We are also including trading fees here, by the way. This is just when we go long and in cash. So we're not betting on falling prices for this simulation, but we can also short. Then we get slightly more volatility, but also a higher performance at the very end. Here are those performance numbers. So that's an alpha of more than 100% per annum over just buying and holding Stellar. And that's then how that looks like on a live chart. So we have seen the golden cross on the 24th of May. Currently we are still bullish. The 2-day SMA is far above the 8-day SMA. But once we get that death cross, that's when I might be interested in potentially betting on falling prices. Seeing the XLM price being relatively high compared to Bitcoin is already a first indication. But I think it's a bit too early to enter right now because there's always the risk of seeing a potential secondary rally after a few days. If we were to bet on falling prices right now, and then the price suddenly spikes by more than 100% from here, then we are in big trouble, at least if we don't set any proper stop losses. And who is to say that those 2 lines in the sand are going to hold? Maybe this is just imagination, and maybe this is actually how Stellar is going to perform in the near future. That would be a risk, right? If we now were to short XLM, it could still perform by another 80%. And so that's why I want to see the current momentum first die down before entering any short over here. Now, what about a long position? What about buying Stellar? Let's say for the short term, just for this current rally. I think what's important here is to have a trailing stop loss. So as the price increases, we just adjust our stop loss, and once the rally stops, we exit very, very quickly. Now, if we wanted to do this, let's say on the perpetual futures market, that's usually where it's done because that's where the trading fees are lower. If we do this with the perps, what is the ideal leverage? So let's say we are courageous here. We want to bet on rising prices. How much leverage historically would have been the best? There's also a backtesting mode in Bitcoin Strategy Analytics for that. And that's the leverage optimization mode. I've already run the numbers. You do not want to exceed 1.75x. Everything that goes beyond that reduces long-term returns. If you go beyond 3.5x, you even get liquidated long-term. For the short positions, the liquidation level is even at 2x, and the optimum is only 1x. So when I'm shorting, when there's a death cross, I won't use massive leverage. I will just go with 1x. But if you wanted to speculate on a continuation of that rally, please don't go beyond 1.75x. I don't open that position. I personally prefer to just go with the macro trend, and I still think that the macro trend is rather bearish. I think that this is the more likely long-term scenario, but still, there is a case to be made to also go more risk on, simply because this strategy worked extremely well in the past. So the 2-day plus 8-day simple moving average. And so that's in general how I construct my trades. This is my trading history. The number of winners and losers is pretty much equal, but still on average I make more than 5% per trade, while the average holding duration is a bit under a month, and that's simply by using backtested strategies. So for example, when we shorted Luna Classic recently after a short squeeze, we did this after the death cross appeared. So let's have a look at this. Here is that signal, a death cross, and then subsequently we closed that position once we got the golden cross. So very often those kinds of back-tested strategies work extremely in our favor, especially if you also set proper stop losses when things don't work out. Again, it's the long term that I believe matters, and I'm sharing all of this data with all of those trading signal proofs with each individual message here to create transparency, to show what's actually possible, and also to have some realistic expectations, right? If you start trading actively, you're not going to double your capital with every single trade. There are losers, there are winners, but in the end, if you started trading with me 2 years ago and you bet 10K on every single trade, you'd now be up by 80K. And that's independent of whether we are in a bull market or in a bear market. So feel free to check it out. The link is down below. There's also a 7-day money back guarantee. So in case you don't like premium, just message me within the first 7 days and I'll refund you 100%. There's really no risk for you. For now, Stellar looks bullish, but make sure you don't take on too much leverage. 1.75x is the absolute maximum. I'd argue that 1.5x might even be better, given that it's much less risky and the incremental gains from 1.75 to 1.5 is really close to zero. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Link to Premium pops up here on the screen. Thanks for watching. See you next time. Cheers.